$40 billion. That's Ripple's new valuation after a $500 million strategic investment. And the twist is, they're still private. Why would a company take Wall Street money at that scale and still stay off the public market? Here's why that's not hesitation. It's strategy. Everything here is for educational and entertainment purposes only, not financial advice. Always do your own research before making any decisions. If clear, no hype crypto education helps you, please like and subscribe. It tells YouTube to share this with more learners. If you're newer to crypto, don't worry. This isn't about token prices. It's about the financial plumbing being rebuilt beneath them. A valuation simply reflects what investors believe a company is worth today. And in private markets, that value comes from negotiated funding rounds, not daily trading. So this $40 billion isn't a hype pump. It's investors pricing Ripple's business infrastructure. Here are the facts. Ripple raised roughly $500 million in a strategic round, led by Fortress Investment Group and Citadel Securities. The valuation confirms market confidence in Ripple's global infrastructure, and the choice to stay private signals focus, not fear. The reason is what Ripple's built. Over the past 2 years, Medico and Standard Custody gave regulated custody. Hidden Road became Ripple Prime, the institutional brokerage engine. GTreasury connected Ripple into corporate liquidity. Palisade added wallet security and programmability. And the pending Rail acquisition brings real-time stablecoin payments. Together with RLUSD, Ripple's regulated stablecoin, that's a full institutional stack. Let's translate a few terms. Prime brokerage is mission control for big clients, managing credit, execution, and margin across venues. Custody is bank-grade safekeeping of assets. Treasury is how companies move and reconcile money. A stablecoin is a token pegged to a currency like the dollar with transparent reserves. So why stay private? Integrating 6 acquisitions while launching Prime and scaling RLUSD is simpler away from quarterly scrutiny. The private route lets Ripple finish the build quietly, convert pilots to production, and control its own narrative. That's execution over exposure. Now, evidence this isn't just talk. RLUSD publishes monthly attestations of its reserves, transparency that institutions require. A pilot with Mastercard, WebBank, and Gemini is testing RLUSD for credit card settlements on the XRP ledger. And Bitnomial now accepts RLUSD and XRP as collateral for derivatives margin, showing how digital assets are entering real finance. Think about that card pilot. Card networks usually settle in days, with complex float and reconciliations. A stablecoin settlement could shorten that to minutes, improving cash flow and reducing risk. It's still a pilot, but if scaled, this changes the card backend forever. Then capital markets. When a regulated venue like Bitnomial treats RLUSD or XRP as margin collateral, it shows these assets are now part of risk management, not just speculation. Faster collateral posting means capital freed up faster. Efficiency CFOs notice. And in Treasury, GTreasury integration could let corporates sweep idle funds into RLUSD and settle payables instantly. Programmable liquidity, real-time reconciliation, and zero end-of-day batch delays. This isn't number go up hype, it's time to cash goes down. For those asking, what about XRP? It's the connective tissue. XRP provides the on-ledger liquidity that links stablecoins, treasury, and settlement. As Prime and Treasury workflows mature, those XRP bridges become standard operating procedure. Now, why this matters long-term. Ripple now controls custody, Prime, Treasury, wallet fabric, and rails. A moat few can replicate quickly. The valuation price is not hype, but the cost for others to catch up. What most are missing: the collateral flywheel, where demand for RLUSD grows with transaction volume, not trading cycles. The private liquidity model. Investors and employees get relief while Ripple keeps control. And policy leverage, regulators can now point to Ripple's stack as a compliance-ready model. Of course, there are risks. Pilots must prove out commercially. Prime needs sustained liquidity and counterparties. Regulations can still evolve, but every sign points to momentum, not retreat. Quick recap for newcomers. Ripple built a full institutional stack: custody, trading access, Treasury tools, rails, and a stablecoin. Big investors validated it at 40 billion. Now, it's about turning pilots into production. What to watch? RLUSD, attestations, prime counterparties, and Mastercard pilot results. Each milestone confirms that this isn't hype. It's real infrastructure taking shape. So here's the payoff. Ripple's 40 billion valuation isn't just a headline. It's the receipt for 2 years of disciplined building. Staying private keeps the focus on integration, not quarterly theatrics. If the pilots go live, Ripple won't just be part of the financial system, it'll be woven into it. What do you think? Should Ripple stay private or go public? Drop your take below. This channel is for educational and entertainment purposes only, and is not financial advice. Always do your own research and keep the discussion respectful. If you enjoyed the video, please consider liking, subscribing, leaving a comment, or sharing it with a friend.